Welcome to the Wealthfinity channel, where we discuss all things related to personal finance and wealth building. Today, we're going to dive into one of the most important considerations when buying a home: how much you can afford for a mortgage. The idea behind determining your mortgage affordability is to ensure that you can comfortably make your monthly payments without stretching your budget too thin. We'll explore the various factors that go into determining how much you can afford, and provide tips on how to make the most of your budget. So, whether you're a first-time homebuyer or a seasoned pro, this video is for you. Let's get started. When it comes to buying a home, one of the most important factors to consider is how much you can afford to pay each month for your mortgage. The maximum mortgage payment you can afford will depend on several factors, including your income, credit score, and current debts. In this video, we'll walk you through how to use a mortgage calculator and what factors you should consider when determining how much home you can afford. First, you'll need to gather some information to input into the calculator. This includes your income, debt, and credit score. You'll also need to know the current interest rates for mortgages, as well as the length of the loan you're interested in. Once you have all of this information, you can input it into a mortgage calculator. Most calculators will ask for your income, debt, credit score, and the interest rate for the loan. You'll also need to input the length of the loan, which is typically 15 or 30 years. To calculate the maximum mortgage payment you can afford, you can use an online mortgage calculator or work with a lender. Some common factors that will be taken into account include your income, credit score, and current debts. The good news is that there are many tools available to help you figure out how much mortgage you can afford. One of the most popular and user-friendly options is a mortgage affordability calculator. These calculators are easy to use and can give you a quick and accurate estimate of how much mortgage you can afford based on your income, expenses, and credit score. The calculator will then use this information to determine how much home you can afford. It will take into account your income, debt, and credit score to determine how much you can afford to pay each month for a mortgage. It will also take into account the current interest rates and the length of the loan to determine the total cost of the home. When using a mortgage calculator, it's important to keep in mind that the results are just an estimate. There are many other factors that can affect how much home you can afford, such as your down payment, closing costs, and property taxes. It's also important to note that the calculator's results are based on the information you input, so it's important to be as accurate as possible. In addition to using a mortgage calculator, it's also a good idea to talk to a mortgage lender or financial advisor to get a more accurate picture of how much home you can afford. They will be able to help you take into account all of the factors that can affect your purchasing power. To use a mortgage affordability calculator, you will need to input some basic information about yourself and your finances. This includes your income, your monthly expenses, such as rent, utilities, and credit card payments, and your credit score. The calculator will then use this information to calculate how much mortgage you can afford based on your ability to make monthly mortgage payments. Your income is a major factor in determining the maximum mortgage payment you can afford. Lenders will want to see that you have a steady income and that your income is sufficient to cover the mortgage payments. It's important to keep in mind that while a mortgage affordability calculator can provide you with a rough estimate of how much mortgage you can afford, it's always a good idea to speak with a mortgage lender or financial advisor to get a more accurate picture of your financial situation. They can help you understand the different types of mortgages available, what interest rates you qualify for, and what the best options are for you. In addition, it's important to consider other expenses that come with homeownership, such as property taxes, insurance, maintenance, and repairs. These costs can add up quickly, so it's important to budget for them when determining how much mortgage you can afford. Your credit score is also an important factor in determining the maximum mortgage payment you can afford. A higher credit score will generally result in a lower interest rate, which means that you can afford a higher mortgage payment. In addition to your income and credit score, lenders will also consider your current debts when determining the maximum mortgage payment you can afford. This includes any outstanding loans, credit card balances, and other monthly payments. It's also important to keep in mind that the maximum mortgage payment you can afford is not necessarily the same as the amount you should spend on a home. You should also consider other factors such as the cost of living in the area, and your overall financial goals and priorities. The maximum mortgage payment you can afford will depend on several factors, including your income, credit score, and current debts. Using the 28/36 rule, working with a lender, and considering other factors such as the cost of living in the area, will help you determine a realistic and sustainable mortgage payment for your budget. A mortgage affordability calculator can be a useful tool in helping you determine how much mortgage you can afford. However, it's important to remember that this is just an estimate, and it's always a good idea to speak with a professional to get a more accurate picture of your financial situation. With the right information and a little bit of planning, you can be on your way to homeownership in no time. A mortgage calculator is a great tool for anyone looking to purchase a home. It can help you determine how much home you can afford and give you a rough idea of the total cost of the home. However, it's important to keep in mind that the results are just an estimate and other factors such as down payment, closing costs, and property taxes should be considered. It's always advisable to take guidance from a mortgage lender or financial advisor to get a better understanding of your purchasing power. In conclusion, determining how much you can afford for a mortgage is a crucial step in the home buying process. It involves taking into account your income, debts, and credit score to calculate your debt-to-income ratio, which is used by lenders to assess your ability to make mortgage payments. It is important to budget accordingly and not stretch your finances too thin in order to avoid any financial stress in the future. It is always recommended to consult with a financial advisor or a mortgage professional to help you determine how much you can afford for a mortgage.